Hello traders, welcome to another weekly analysis for August 7 to August 11. Now, apologize for the late release. I had a really busy week basically during the weekend. So I took a day off yesterday because, as usual, Monday was very quiet. It also is a Canadian holiday. So back at August 8th, right now is Tuesday. We are right almost at 7:30 a.m. Eastern Standard Time. So let's get into it. So first of all, this week is not really a jam-packed economic data release. Unlike last week, we had NFP. We also have Bank of England. So it was a quite excited week last week. This week, of course, which is very normal once you have a very busy week. Also, normally it will come the week after will be quiet. So as you can see, Monday yesterday, Canadian bank holiday, and aside from that, didn't really have much going on aside from the China trade balance, which is also not really a big deal at the moment. Right now, people are really looking at the manufacturing data from China because that's directly impact for Australian dollar. As many of you know already, whenever China needs to boost up its industrial production or its manufacturing production, it needs raw material, particularly copper and iron ore, which will be imported from Aussie. Now, speaking of that, if you take a look at copper, basically the base metal market, it's forward chart for all these four. But look at copper, it just continue making a higher high. Now, some people are worried saying that it might be overextended here, if you can see this line. But for me, it's not really a big deal. Like, I try not to guess the direction of the commodity market for a very simple reason. I simply don't know how to guess it, and that's something actually universal for a lot of traders. I mean, you might think people who specialize in oil or people who work in the oil field will have a better insight. What really is not the case, because right now the commodity itself is just very volatile. There's the nature of the business itself is already volatile. Now, not to mention you have a lot of speculating playing around in this field, and the whole thing is really international driven. Back then, for example, if you say you want to look at the oil price, you only need to look at what's OPEC doing and what's their future plan for the oil market, because basically OPEC cornered the whole oil market. Right now, that's not the case, since the shale production technology has invented. As you can see in 2017, that OPEC basically couldn't really do much about the oil price. They have tried very hard to pump up the price to curb the output in order to boost the price, but they have met the equal force from the shale producer, and that's basically right now the global market really very hard to just look at one single entity, and that's why the micro picture become more important. So for copper and iron ore, the way I look at it, I just go with the trend. I don't like to guess the top. It's just because it doesn't work that well, I think, in the commodity market. So as you can see, it's still making a higher high. We're still in a very high point for copper, same as the iron ore. So these two alone, of course, supported by the ongoing Chinese manufacturing productions, that are all very good element for Australia's economy. So that's pretty much for yesterday. Now today, again, not much going on. We did have the German trade balance, French trade balance. That's pretty much it. Even the job opening is not a big deal because the real job data had already happened last Friday with the NFP. So the only thing coming up will be tonight, the Asian session. We will have the CPI and PPI. Now this will be more interesting to see, because this is not only about China. Right now, if the economy or the inflation is doing well for China, then basically you will have a risk on sentiment that is a much better things for the global market, basically. But again, not a direct impact data. So the real main events comes in tomorrow, which we have the RBNZ cash rate statement and the press conference. Now, if you've been following the market, now recently NZ does not have a good fundamental data, so people are already selling New Zealand dollar into the event, thinking that RBNZ will deliver another dovish comment. I personally think it will be a non-event, because the only reason the central banks talk very dovishly is for them to basically talk down their currency. Now, if people are already selling it, and there is really no point to keep talking down your currency. So, because the fundamental data had already been in a quite negative trend, in the past months or two, so really no point for the RBNZ to continue giving a dovish talk. Now, for that being said, the RBNZ, especially the governor Wheeler, has the tendency to be dovish. So really, because of that, it's basically the expectation will be fulfilled. So I don't really think there's going to be much happening at the events. But if you take a look at the let's take a look at Aussie chart. I'm sorry, take a look at New Z dollar chart. So if you take a look at New Z, it's just an ongoing downtrend. Lower low, lower low. And New Zealand, same thing. If you take like Euro New Z, same thing. So just very clear that people are actually selling New Zealand dollar right now into the RBNZ events, and that means there's a high potential that New Zealand dollar, the seller might take the profit and unwind their position after the events. So just be careful if you're selling into a certain catalyst. Always ask yourself, what's left. What's more in the future? A lot of people make this mistake when they're trying to sell or buy into the events, and when the events is exactly as expected, they thought that the momentum will continue, where on the contrary, you don't have anything to hope for or to look forward to. So it actually will sometimes, or a lot of time, will give you a reversal reaction. And Thursday, again, not much data coming up. So until Friday, we will see the CPI data. Now, this will be quite important. First of all, because we now have a very tricky situation in the US dollar. The US dollar, of course, is still fundamentally strong. But so far, after the June rate hike, there isn't much to look forward to for US dollar buyers. So a lot of buyers are actually unwinding their position. Now, on top of that, you have the the ongoing White House turmoil. Basically, a lot of political drama that's still happening. And most important thing is that the fundamental data had been on the weaker side for US dollar. Now, all these, and if you look at the technical chart, US dollar has also been in a very steady downtrend. Now, all this had changed last week or a week before. First of all is that last week we finally had a positive NFP. Now, this is the last week economic data. If you look at last Friday, the NFP is actually pretty good. Aside from the figure with 209K, better than expected, it's not, it is like I keep saying, NFP, nobody's looking at the figure anymore. It's actually the average earning, and this is finally the first time we hit 0.3%, because the previous two, it was a miss, it was another miss. So finally, it's a nice boost for US dollar. And the unemployment rate is also lower, 0.1 spot lower than the previous one. So all these are pretty good data. So that's the fundamental side. And if you take a look at the technical side, this is the DAX monthly chart. You're also at a significant support here at around 92.89 to 93. So I'll say around 93 handle. It's a quite significant support. and that's something you have to watch out, because it takes a lot more for a seller to keep breaking below this support. A lot of trader will either take profit or unwinding their position at this critical point. So now you have a fundamental data backing up with a price action, and that's why US dollar might have a big rebound. And in fact, if you look at other currency, weaker currency like cable for British pound is getting very weak right now, and that's why we've seen already, a completely reversal of the trend. So that's something you have to keep in mind. But all this will either stop or continue at the Friday CPI. What I mean is that if the CPI is a positive number this Friday, then along with the already positive NFP and the fact we are bottom up at the DAX, that means US dollar will actually reverse its direction, especially versus other weaker currency. Now, I wouldn't say so much for euro dollar, because euro is still very strong, much stronger than in the US dollar. But if you're talking about dollar yen, you're talking about cable or dollar Swiss, then US dollar might continue its uptrend. However, if the CPI this Friday is a negative, then that's another big blow for US dollar. Then I will say that the NFP positive momentum will only be short-lived. So we'll see what happens this Friday. This will be important data. So really, if you take a look at the weekly, nothing much aside from RBNZ, which I personally think will be the non-event, and the CPI, really nothing much to look forward to for this week. The weekend, you will have another New Zealand data coming up, pretty much GDP from Japan, and the Chinese data. This will be important for Australian dollar for this weekend. And next week, if you just a quick peek, just to see if you have any major events, and then the only thing that jump out for me will be the UK data. You have the employment data, and you also have the retail sale, and also have the FOMC minute, Aussie employment data, and that's pretty much an ECB employment monetary policy minute. So next week obviously will be a more excited week. Also have Canadian CPI, which will be excited to take a look as well. So that's for next week. Now, the reason I do bi-weekly is because a lot of time I like to trade into a catalyst. That means if I'm looking to trade anything next week, I'll try to get into maybe Thursday or Friday to hold down the position over the weekend. And that's why I like to know what's going to happen next week. But other than that, I don't like to see too far away. 2 weeks is really the maximum forecast for me personally to look at the data, the event-based trading. So let's talk about the 8 major currency, and I will relate it to what had happened last week. So Australian dollar right now, I think is fundamentally neutral and sentimentally strong. Now, let's talk about the strong part. Why is it strong? The strong part really comes from, as I mentioned, the commodity market. So because Aussie is directly related to base metal and iron ore, so that's why Australian dollar had been very well supported. But that's the sentiment part. Remember I said the commodity is highly volatile. So that's the sentiment part. Fundamentally, it's really in a neutral picture. The data, fundamental data, they are not bad, but also there's nothing really happening. It's sort of flat. And because of that, really the only thing that's supported is, first of all, the fact that it's still a high yield currency, 1.5%. Second highest one, basically among 8 major currency. And the fact that the commodity market is still in a high trend. Now, third thing is that the Chinese data are still doing well. Now, if you look at last week, the manufacturer PMI is still above 50. It's slightly below the expectation, but still in a very stable position. If you look at the casting manufacturer PMI, it's actually much better than the expected and previous number. So these are all pretty good data point for Aussie. And really, to be honest, I don't think even the fundamental data is playing a huge role right now for Aussie, because you can just clearly see a lot of traders are buying Aussie as long as the commodity market is well supported. And that means even you have a missed data in, say, inflation or employment or GDP, that downtrend effect might be short-lived. For that being said, the last inflation data, the trimming data from Aussie, was actually in line. And the next week we will see another employment data. The last employment data was negative on the headline figure, but the full-time employment was actually increased more than the part-time. So it was also not a bad data. Because we don't have much data coming up this week, so Aussie, if you want, you can buy it at providing if you find a nice retracement. Now, personally, I am in at Aussie New Zealand trade, so I'm buying Aussie against New Zealand dollar. Now, I already tell you the reason I choose Aussie is because the recent commodity market strength. And I bought it last week, actually, just right at this, 50%, 38% zone right here. And as you can see, after last week, we actually had a pretty nice uptrend, and now it looks like we are going to take off and hitting maybe 1.0850 to taste this previous top. The reason I sell New Zealand is because, let's jump to the New Zealand dollar. New Zealand dollar, the recent fundamental data had been quite weak, and a lot of expectation was missed, and that actually fulfilled what the RBNZ had previously commented on. Now, previously, when the New Zealand data were good, RBNZ actually came out and jawboning the currency, means they talked down currency severely, and people were wondering what was the justification for them to do that. Now, they were saying that the data is not stable enough. They need to see at least 3 to 6 months of ongoing positive data, and they were right, actually, because if you're looking at the recent data, it is in a downtrend. So nothing to worry right now for New Zealand economy. It's still okay. If you're looking at a bigger picture, 2017, they are still doing way much better, and the forecast is still for them to have the first rate hike in 2018. So of course, but they pushed back. It was in 2018 first quarter. Now they pushed back in the 2018 third quarter. So a little bit setback, but nothing too severe. Now, a lot of people would jump in sell Newsy. You can do that. The reason is because we have the RBNZ coming up. So if you want to sell into the events, that's totally fine. But you have to always understand that New Zealand dollar is the highest interest rate currency. That means you always have a strong support for people who are doing a carry trade. And if you look at a fundamental picture for New Zealand, as I mentioned, it's not really negative. We have a recent setback of more in a slow to the downside, but nothing really to give you a worry sign. So that means a lot of New Zealand dollar trade, unless you are in a Euro New Zealand, because Euro is very strong, just looking at the price action. But if you are in something like New Zealand, and you try to sell it, you just have to be careful because you are still selling against a very strong uptrend. Same as New Zealand Swiss. Let's take a look at the Pound New Zealand. Pound New Zealand is more in the choppy section, but look at this strong downtrend. I would say that New Zealand dollar is still way much stronger. So that's something to keep in mind, to be careful if you want to do that. Now, that's also the reason why I choose Aussie New Zealand, is because Aussie is very strong, and Australian dollar and New Zealand dollar are both in the same commodity currency bracket. That means I have less risk to get affected by the risk sentiment. Another thing, I'm looking to long Aussie against Swiss franc. And I choose Swiss franc. You can either do Swiss franc or you can choose Aussie yen. It's really depending on your personal preference. I don't choose yen just because I think Swiss franc is much weaker at the moment. And speaking of that, let's get to Swiss franc. Now, Swiss franc, of course, as many of you know, it's not really a currency to talk about because nothing really changed for their central bank policy or the fundamental data. Basically, they are still in a very deflationary environment, and also they are a small country that highly rely on export. So their central bank policy is always the same. They are going to weaken their currency whenever they think their currency is overvalued. And the interesting thing about Swiss franc is their monetary policy, because they are actually looking to widen the balance sheet. That means that they're looking to buy more of the bond in order to continue the easing. So they are basically looking to ease more. Now, what's that going to direct impact for the currency? Of course, is going to weaken the currency. And that's their policy. Now, you have to remember, Switzerland is a very small country. So, really, what I'm trying to say is that there really wouldn't be too much opposition or too much, like whenever the central bank set up something they want to do, then basically it's just a one-way street. So because the central bank is looking to widen the balance sheet on top of the already easing environment, that's only going to fundamentally weaken the Swiss franc even more. And sentimentally, why is it better than Japanese yen? Is because their central bank are more notorious for the interventions. That means they have no problem to jumping and selling their currencies. So they're trying to weaken their currencies. So that's why if you are buying Swiss franc out of the safe haven events, you have to be very careful, because you have a very strong force to go against you directly. On the other hand, if you are selling Swiss franc, you are in a much better position, because basically the whole central bank, the government, is behind you. So you do have this ceiling for you. So that's why I choose Aussie Swiss. Another thing about Japanese yen, as I mentioned, is that I don't like the first reason is because I'm already at other Japanese yen trade. That's the first reason. Second reason is the North Korean issue. It continues to play a huge effect for Japanese yen. They just passed the sanction for UN to North Korean, and I think it will be a highly volatile event. Follow up, the next half year of 2017. It will be interesting. But because of that, Japanese yen will always have a strong reversal effect, basically. So I just find out if I have an event to trade into, if, for example, if this week we have an RBA meeting, then yes, Aussie yen will be good, because I don't have any catalyst. So for me, this is just playing with the fundamental and the price action. And if that's the case, I want to choose something that has less risk, less event to interfere. So that's why I choose Aussie Swiss. Now you can just tell that by the price action, it's also Australian dollar is also a much stronger pair. Of course, the downside is that you might not get filled when you choose this kind of strong currency pair, because my order is around here, this zone. So the downside is that it might not even fill me in, where if I choose Aussie yen, and if I just do a simple Fibonacci retracement, I'm already at 50% area, which is not bad to buy into it. So again, that's something you just have to, it's a personal choice, basically. So that's pretty much Australian dollar for me. And Canadian dollar really is still a very strong currency for me. Now, last week, we did have the job data. And although the employment data had missed, but as I mentioned, the employment figure is always volatile. So you don't really need to, you see you have 3.2 here, you have 1915, and you have 54, 45, and now you have 10. So it's not really something you need to pay too much attention to the actual number, but you need to pay attention to whether it's still in a positive territory. So as long as it's in a positive territory, then I would think it's not a bad. And as long as you don't have a much deviation from the expect number, then it's nothing to worry about. Because as I mentioned, none of the central bank is going to change their policy out of a single piece of data. That's something you have to always remember. You can always trade this kind of fundamental data as a short-term trading, but don't get ultra pessimistic or optimistic out of a single data. That's not how the central bank looking at the data. They're really looking at a series of data. So if you're looking at the Canadian data, it has been in a positive territory since August last year. So if you take September, after September, it's really all been in a green zone. Even last year, you still have a lot of negative data, and after September, things are looking well. So that's why they say the employment is a strong point for Canadian economy right now. Trade balance had a large miss. Now that's a setback because trade balance is important for Canada as well. And I take a look at the detail. It says mainly from the commodity market, but as you can see, not really something to worry about. Unemployment rate actually dropped at 6.3%. That's really one of the lowest since a very, very long time. Look at that. So this, along with the ongoing Bank of Canada hiking cycle, you can say that it's still a very strong currency. Now, whenever you trade, of course, you want to know the risk. The risk is the most important thing for every trader. A lot of people, they only want to look at the beautiful side. No, I think you need to really control and minimize the risk. And the job is not to take a trade with a zero risk. No, it's virtually impossible, right? Every time you trade, there's always going to be risk. You have to really change your mentality to understand that risk is part of the game. Okay, without the risk, you don't really have anything going on. So the risk for Canadian dollar right now, I think, comes down to three parts. First part is the oil market. Now, oil had been quite supported recently. We're still, once we had this 48 double bottom, we are still doing okay. But you have to understand this is a summer season. So summer season, for the micro picture, is that people are actually they travel more, right? So you actually use more oil. And so once the season passes, what's going to happen to oil? We don't really know, because OPEC, their policy for 2017, it seems to be working, but not so much. So that's up in the air. Now, the second thing is that in 2017, we realized how ineffective basically OPEC has become. I say ineffective is really the comparison to maybe 1970 when you have the oil crisis, because the OPEC was such a strong entity. Nowadays, really not so much. In this year, what I witnessed is that a shale producer really has a very strong upper hand in the oil market. Originally OPEC was hoping back then, 2015, 2016, hoping to let oil market fail to a point that they can basically drive out the business for the shale producer. And that did not work. Actually, that backfired for themselves, because they are actually losing money too. So they changed their policy, and with all the OPEC members trying to pump up, and now the shale producer comes in. So really, unless they find a balance in this, actually, otherwise we don't really know where the oil is heading. And as I mentioned, I don't think anybody knows. Even an expert on the paper that you read, nobody knows. It's not that clear for the oil market. It's not like you looking at the US dollar and just understand who is controlling. Well, basically it's a central bank, so it's a more easier way to see. But for the oil, there's just too many macro elements to control it. So that's the first risk for anybody who wants to buy Canadian dollar. You have to be careful from. The second risk comes from the NAFTA deal. Now, of course, the NAFTA deal is not a headline anymore. Remember back in 2017, the beginning, people were very panicked over this NAFTA renegotiation. Now it's not a big deal, not a breaking point, but it's still a risk that you need to keep in back of your mind. I understand that whenever you're buying Canadian dollar, you need to understand exactly what's happening to this trade deal between Canada and US. Now the third risk is the fundamental data itself. Because so far the Bank of Canada raising the interest rate, and a lot of experts think they are doing it too early. And the reason I think is because the current fundamental data, especially inflation, is still not strong enough. So the Bank of Canada came out and saying that they set up their policy in accordance with the economic model. That means they're looking into the future. They want to calculate what is about to happen. But many of you know that the models are not like a crystal ball, right? The models are just models. That means that if the model is correct, if the fundamental data is turning upside in a trend, then yes, this hiking policy will keep going. However, if we start having a negative fundamental data this month, next month, if you start having this kind of thing happening, then you need to be careful, because that means the model is wrong and they might come out and change their stance. So far, that's not the case. Just judging by the employment, it's really good. And that's why I say next week, this is this week, but next week you will have the CPI, and will be important for Canada. Because if next week the CPI is good, along with the positive employment, along with the positive GDP, that means the Bank of Canada is correct, then the market will continue buying CAD. However, if the CPI is a large miss, then it will create some doubt. I don't think people are going to sell CAD right away, but it will create some doubt over this ongoing momentum. In terms of CAD, I'm personally short pound CAD right now. I actually this was my trade last week. I actually short into a Bank of England event, and this was another pretty good trade, a very typical trade into the events. I trade into events when I see a continuation of buying in the British pound. Now the reason is because this is very typical for me. I really like this kind of trade. It's because when you look at this kind of buying, you need to ask yourself, okay, exactly what's going to happen at the event. At the event, there's a few scenarios. Either Bank of England raise the interest rate, then that will be a really bad thing for my trade, because that means it will surprise the market and really be a strong momentum for British pound. That's the worst case scenario. Now the other two scenarios is that Bank of England did not raise the interest rate, but they give a hawkish comment. Now that would not be something new. So when you have something that is new, that is not new, that is exactly as expected, there's nothing to look forward to. That you will have a buying rumor sell effect. Buying rumor sell fact effect. That means you will see a reversal action. The third scenario is that if the Bank of England actually change their stance and become kind of dovish, then you will have even more strong selling into British pound. And that was what happened last week, actually. So that means out of the three events, if the two events happened, it will go my way. So that means I have higher probability. You see, that's how I judge a trade. I don't trade a trade saying that, oh, there is zero risk. There is always a risk for the trade to not work out. But if I have more probability, 2 out of 3 scenarios that's going to be benefit for my trade, then that would be a trade we call a high conviction trade or high probability trade. So that was what happened. I actually sell at very high point, almost at here. And now we are we're in a sideways right now, but I think we will continue to go the downtrend. Now, since we're talking about British pound, let's talk about what happened for pound. So what happened for pound last week, as you mentioned, it's a Super Thursday. Means last week we have the Bank of England event, and if you've been following the market, not only the Bank of England did not raise the interest rate, they also changed their stance. So first thing is that they didn't raise the interest rate. And at the press conference, the Carney became dovish from the previous hawkish comment. On top of that, the MPC vote was as expected, but lower than last time. So last time you actually have 3% that looking to hike the interest rate. What happened is that one of the official had left, and now you have a new official. So that's why people were expecting this kind of result. But nevertheless, what it tells you is that the hawkish momentum had died down within the committee. So that's two negative things already. The third thing is the inflation report and the forecast. Not only the inflation for 2017, 2018, 2019 expectation has all been reduced basically. All the GDP forecast has also going down. So that's basically not a really good thing for the future for Britain. And speaking of future, you also have this underlying Brexit ongoing. Now, if you're looking at the news, everything, it's still an event. It's not that sensational as before, but it's still there and it still create a lot of uncertainty. Now, one thing to realize is that, UK, the employment and the economy is actually quite resilient after the Brexit. But I read an article that the business is not really investing in hiring. It is very logic because most business set up their plan in a 3, 5, or 7, even 10 years plan. That's how the business investment, especially if it's a real manufacturing. So if a country does not even know where the future is in the next 2 years, of course the business owner is not going to take that risk and to build the infrastructure or buying the new factories or even hiring the new workers. For them, of course, the more smart way is to wait and see. You do hear the news saying that Google and a lot of big corporate giant buying a lot of properties or trying to invest in UK. But you have to look at the different picture. For the big corporation, they can afford this kind of bet. Well, you might hear like they spend multi-million or even $billion. That's not a big budget for them to invest. So for them to put money in UK and sort of like speculative, betting on the fact that the pound is depreciated, it's a very smart move. It's like if you probably heard that Warren Buffett bought a lot of land around the Panama Canal. So same thing, like if you are rich enough, you want to diversify your portfolio, then you can always have this kind of speculative play. And it sounds on a hindsight like a lot of money for regular people, but it might just be 1% or less in your portfolio. So what's really important is this small and medium business. So if they're not investing, then it's not a good sign. So basically what I'm trying to say is that the Brexit is still an underlying risk for Britain. And along with the last week's this negative momentum, right now I think British pound is going to drop for this week at least. Now next week, of course, we have the employment data, but that's really not going to change too much because right now the Bank of England has completely turned dovish. So unless between now and then you have Governor Carney or people coming out to do something else, otherwise I do think British pound is a negative currency, and that's why I choose to sell pound CAD. Now, if other than pound CAD, I think pound Aussie is actually a good choice too. As you can see, it's actually dropped even faster than CAD. I didn't choose this one. It's because I'm already in pound CAD, so I don't want to overexpose in a single currency or a single idea, basically. Aside from that, a lot of people short cable, and as I mentioned, it was a fantastic trade for a lot of people. A lot of people actually buying at here. That's a very interesting story to remember, because if you, whatever trader you are, you always have to know there is risk. A lot of people buying here because they think this is a strong support. They say, okay, this is not only a 50% Fibonacci line, that we also have a previous high here. So they think, okay, this thing's gonna hold well. The thing is that NFP is coming last week, and people somehow, if you read the black swan events, it's very simple that people somehow think they can predict the risk or predict the future. So there's this false sense of security for people from last week, thinking that non-farm payroll is going to be another negative event. So they actually go ahead and and buy cable. And why do I know that? Because I'm on a lot of forum myself, so I see a lot of trade idea is that buying cable at this 50% area, and a lot of people just really completely ignore the fact that you have a very big events coming up, and if this event is a positive thing for US dollar, along with the fact that US dollar is at a strong support, we will see a large reversal in cable. We will see a large breakdown in cable, and people just somehow ignore that. So I'm not saying don't take this kind of trade. In the hindsight, it looks very good, and if you want to do it out of thinking that this is gonna be a good trade, then you can still do it. But just knowing that when you look at the central bank events, basically why cable drop like this is because you have two surprises. You have, first of all, Bank of England completely changed their stance from hawkish to dovish. That's the first surprise. That's the first blow for a cable buyer. Second surprise is non-farm payroll is actually a pretty good result, especially average earning. So two consecutive surprise to throw your trade underwater. And that's something you always have to remember in a financial market or in life. You simply don't want to have such a strong stubbornness or conviction saying that, okay, I don't think it will happen. Of course, everything can happen and everything will happen. So just understand this part and always look at the risk lies ahead of you. So that's British pound. Now, which one did I skip? Swiss franc I talked about already. Now euro. So euro last week doesn't really have much going on, and same as this week. But if you take a euro dollar, it's still quite well supported. So euro right now, I would say in this month of August, probably we're not gonna have too much coming up until September, when we have the next ECB meeting, and they will tell us a more clear direction whether they are going to taper the easing policies. Now, aside from that, the recent fundamental data had been a quite positive trend. CPI had been quite positive. So euro is really an ongoing uptrend. Now, I am personally still in euro dollar. As I mentioned, this was my trade basically all the way from June to July, and now I'm still doing in August. So it's a very straightforward trade. First of all, look at the price action. It's very clear uptrend. Look at the fundamental picture. It's also a very clear sentiment in favor for euro. Now, of course, after the non-farm payroll, I slowly unwinding my position this week, so I'm not really in anything too big right now. It's because now US dollar has changed its momentum. So if this week the CPI is positive for US dollar, then euro might drop further. So that's why I don't want to get caught up, but I just want to train you to think like this, always knowing what lies ahead of you. So although I'm making pretty good profit with euro dollar trade, every week I'm always fully aware what could change, what can happen, what's the risk. And that's something you really have to sharpen your mind as a trader. So this week we might continue. Right now, that's why you have a sideways movement, and I think the sideways movement is going to continue all the way until Friday. If the CPI is negative, then the uptrend is going to continue. If it's positive, we're pretty much going to break this low and doing a more deep retracement. For how deep, I don't know. I don't like to judge those things. I will let the trend or let the price action tell me. But nevertheless, if that's the case, I still want to buy euro, but I'm probably not going to buy euro dollar. If dollar has regained its strength, maybe I'll go euro Swiss, euro yen. Speaking of euro Swiss, I'm actually in euro Swiss pending. Also, same scenario as Aussie Swiss, and really looking to getting at this this zone. Of course, we might not reach here, and that's totally fine for me. But basically, same scenario. So euro, if you want to look at euro, then I think before September, in the month of August, it should still has a very strong baseline support. And British pound, I talked about that already. Now Japanese yen is same scenario as Swiss franc, but just be careful because the North Korean. And as I mentioned previously, I say that, if the North Korean really launch a missile that intentionally or accidentally hit Japan, basically catastrophic event, what's going to happen to the Japanese yen? I said previously that I think it's still going to get a safe haven inflow. Now, I want to remind you that's just my personal bias, right? It doesn't mean I'm right. In fact, I might be wrong. So, because if that happened, that will be the first time, not the first time Japan is in war, but since we have this kind of currency trading, it will be a first time to taste whether the Japanese yen is still a safe haven event, a safe haven currency to go, even when the country itself is attacked. So that's something interesting to. I hope, of course, hope that doesn't happen. That nobody want war, but I'm just saying that if that happen, it will be good for us to see exactly what happened. So New Z, I talked about that already. New Z, I'm actually in a New Z trade which is underwater right now. So this is something I'm still holding it just because. Let me show you here, just for the education purpose. So I got a New Z yen last week, so I'm actually buying against this downtrend. Now the scenario is that I think, as I mentioned, that because people are selling New Zealand dollar out of the RBNZ, so when the RBNZ happened, we should have a large unwinding of the short position, either from profit taking or whatever, and that will give a reversal effect. Now, of course, we are at a very strong and steep downtrend. That means we should really, at the RBNZ, we might have a strong reversal, but it's really much stronger than what I expected. So I am underwater right now in this trade, and I really just hope this trade to at least hold on to it right now. And if RBNZ, if the government leader does not deliver a really ultra dovish comment, then we should see a buy rumor and sell fact effect. I hope that's what I'm hope. But of course, if I'm wrong, then I will have to get out of this trade. So that's again something I want to show you, that it doesn't work all the time if you're trading into a risk event. Of course, I had a pretty bad luck because after I entered the event, we did have a quite new negative data from New Z. So after the event, I think we see the ANZ business confidence was negative, and employment data was also negative. So that's not a good thing. Commodity price also negative. And this week, I think yesterday, inflation expectation also lower than the previous. So really not a good picture right now. And today I think we will have GDT. Do we have GDT today or yesterday? I'm trying to find out. Or maybe that's next week. So anyhow, tomorrow we will see what happened to the New Z. And that's pretty much one thing I'm really like underwater right now. So we'll see. And that's pretty much it, very quiet week for now. And RBNZ tomorrow, again, not expecting too much. But in this kind of time, really, you can either, in this kind of time, I really like to trade with the fundamental plus the price action. The only thing to keep in mind is that you want to have a big enough stop loss, and you want to get in at a really strong retracement. Because if there's nothing to drive the currency because lack of data point, then then for example, that's what I did for euro dollar previously when there's nothing to drive euro dollar. But you want to leave a bigger stop loss because you don't know how much retracement this trade might be. So that's why you want to always protect yourself. Aside from that, looking ahead, within next week, and see if there's anything you are interested in. Maybe you will start to trading into it. Now, things jump out for me, of course, is British pound for next week, because you have a CPI, you also have the employment data. So if the CPI is very strong, then that is gonna create another hawkish speculation, because now they have to really do something about it. So last time we have 2.6, but look at this trend, it was 2.3, 2.7, 2.9. So if you have something over 3, that will be a very hawkish momentum for British pound. Okay, so that's pretty much it. Again, I apologize for the late release for this video. And again, if you have any question, feel free to email me. I'll be trying to answer those things. All right, thanks for watching. Yeah, I think I talked about everything. All right, thanks for watching. I will see you next week. Thanks. Bye-bye.